Bienvenidos a Se Habla Real Estate, el primer show en español con la misión de proveer a la comunidad hispana la mejor educación sobre dinero, bienes raíces y emprendimiento de una manera simple y práctica.
What's up, mi gente? Lennon Lee por aquí. Bienvenido a otro episodio de Se Habla Real Estate, el show donde aprendemos distintas estrategias de cómo invertir, cómo hacer dinero invirtiendo en real estate en los Estados Unidos. Hoy encantado de tener a Steven Rea, un experto de property management. Steven actualmente trabaja para una compañía bastante grande llamada ResProp. Está encargado del crecimiento de la cartera de clientes de property management en el centro de Texas. Steven tiene 15 años o más, ya más de 15 años de experiencia en la industria. Ha estado involucrado en operaciones, capacitación, tecnología, desarrollo de negocios también, y está bastante apasionado con lo que es enseñar, instruir a nuevos inversionistas, a nuevas personas en la industria, estudiantes de real estate voluntariamente. Trabaja para REM, habiendo servido y presidido varios comités locales y nacionales. En Austin, en el 2016, fue presidente del comité. También se convirtió en instructor de esta institución en el 2012 y pues se enfocó en impartir cursos de finanzas y gestión de riesgos a estudiantes en distintas partes del país. Well, Steven, I was talking about you in Spanish. You probably got a few words here and there. Welcome, man. It's a pleasure to have you here in the podcast with us.
Yeah, I appreciate it, and I'm really happy to be here. So thank you for the invite, and hopefully I have some interesting stuff to share.
Yes, I'm sure you do. I'm positive. So, Steven, why don't you actually tell us in your own words, a couple minutes, a little bit about, I guess, your background, your current focus, and like basically how you end up, working with ResProp and in the position that you are right now in the industry.
Yeah. So, like many people who work in property management, I kind of fell into it. It was not something I set out to do, but very quickly discovered that I have a deep passion and love for the industry. I started my career in 2005 working for a private investor, and she owned properties of all types. So we had houses, duplexes, commercial office buildings, retail strip centers, industrial space. I even had a 16-unit apartment community where they paid rent weekly in cash. And that was my first introduction to the business, and really enjoyed it. Enjoyed working with people. I really helped people find a home. And then in 2008, I joined another company, small at the time, management company called Roscoe Properties that was based in Austin. And there I was very lucky. I got to wear pretty much every hat there was to wear in the industry. So started out as a multi-site manager and then pivoted into training, wrote and developed most of their training materials for the property management staff, ran all of their property management software, designed all of our systems. And then the back half of my time there transitioned into business development and working with owners, trying to understand their goals, building management plans that were specific to those goals, and then passing on the operations to our regional managers and operations team after they closed on the property. I took a slight detour from the business 2017 to 2019 to address some other interests that I had. So I went and worked in marketing for a little while, had a short-term rental startup, and it was great because it allowed me to get a little bit away from property management. It was basically the only real job I'd ever had. I was, I think, 22, 23 when I started working for the private investor, and you get kind of indoctrinated into how things are done. Right. And how they should be done. And, this is the way we've always done it, especially when you start into a business fairly young. So the time away was great. It allowed me to form some new ideas about how to manage properties more effectively, how to market them more effectively, and come back now to the industry with ResProp with those fresh eyes and with a company that shares kind of my vision for a different future of not only property management, but all of real estate and how to make it more accessible to people, which is, again, one of the reasons that I'm really excited to be on the podcast today.
Yeah.
So I joined ResProp officially in July of this past year. However, I've known the founder as well as the CEO for almost a decade. We stayed in touch. I teased them. They would call me to pick me for ideas to then go back to the company and implement on their own. And the timing had never really lined up to make things formal. And this summer they did. And I'm super excited to be a part of the team. So my current role at ResProp is taking the point on the Austin market specifically, but on growing our management portfolio of apartments that we operate on behalf of owners. But one of the bigger picture reasons why I joined this company as opposed to many of the other management companies that are out there is the fact that we are not content with the way operations have been done. We think there's a lot of inefficiencies that we can fix, some of which are just a reimagining of how job duties are allocated at the property, but also leveraging technology in a way that streamlines things and ultimately allows us to drive better NOI and better returns for our owners.
Yeah, that's pretty exciting, man. You definitely have the resume, and you definitely know what you're talking about. So I'm looking forward to the rest of the conversation. So you did mention part of one of the big reasons that you joined ResProp is because you have a shared vision, right? So what does that vision look like? What exactly do you mean? What are you trying to do differently, and why?
So there's a couple of easy examples that I usually give people when this comes up. So prior to getting into property management, when I was really young, I had a lot of different sales jobs. And so I had a lot of exposure to what it means to be good at sales. And the revelation I had of typical apartment management is if you went to anyone in any other major industry where sales was the driving force of their business, which it is an apartment, if we're not getting new leases, we're eventually going to run out of money and go bankrupt. If you went to any one of those industries with the premise of we're going to take our least experienced, lowest paid person and make them responsible for this, sometimes with zero training, and when they call in sick, we're going to hire a temp who knows nothing about our product and ask them to sell it, they would think you were crazy.
Right.
And we have our most talented, most experienced people, which in most cases is going to be the property manager, spending 60 to 70% of their time doing data entry and paperwork. And that just doesn't make sense. If you were going to start from scratch today with no obligation to existing job roles or the existing staff structure, a lot of the admin tasks would not be done at the property. Those would most likely be centralized, where you could have a specialist who really focuses on rent collection, who really understands the accounting aspects of things. And then you free up your on-site team to do the things that actually drive revenue, provide great customer service, market the property, lease, and follow up with potential prospects. The big piece there is, the customer service side. The bar is fairly low historically in property management. Yeah. You get the occasional manager who's really passionate about it and does a good job. But, there's actually a conference coming up this week. It's NMHC's OpTech conference where they talk about new technologies. And I'm reminded of last year's, there was a presentation where they were talking about what people wanted in their apartment home. And being a very tech-centered conference, they were talking about smart locks and smart thermostats. And I felt like when I looked at the data on the pie chart they put up during the presentation, they buried the lead, which was that 40% of respondents just wanted better management. At the typical property, 50% of residents, 60 to 60% of residents move out every year. Of that group, at least half are moving out because they're unhappy. So if you could eliminate that eliminates vacancy loss, that eliminates marketing costs, it eliminates make-ready costs, and you have a tremendous impact on the amount of money that the property makes and therefore that the owner makes. So addressing some of those inefficiencies, bringing in tech, we've started and have been very successful this year and are the process of rolling out across our portfolio a centralized services team to do those admin tasks, where we have people who can be really focused on what they're doing. It paid immediate dividends during the pandemic, where instead of having to train every property manager on the changing of laws when it came to rent collection, what we were able to charge, what we weren't able to charge, we were able to train a small handful of people and then have them support the entire company. and all the properties that we managed. And that extended to things that we didn't typically do before, like payment plans. And so having that resource and being able to have experts in that space, as opposed to having to, train 30 people into being a jack of all trades, you just get better results.
Yeah, I think that's definitely been I guess part of the silver lining that we've seen from this whole, COVID situation where we've all the companies, everyone in the industry, and not only in real estate, of course, but everywhere have been put in a position where you at least have now the ability to see things from a different perspective and understand and identify maybe efficiencies where maybe you just didn't have the time to stop and analyze before, right? So with that in mind, what has changed in terms of let's say priorities or metrics that you've been looking at, or even different, whether it's value add strategies or optimization strategies in terms of operations? What has changed after COVID and that you've seen? And I mean, that might be a lot of things, but just some things that come to mind initially.
Yeah, but you're right. A bunch of stuff does come to mind. I think there was an immediate knee-jerk reaction where we saw retention and lease renewals spike up significantly through the April through June, April through July time period. Traffic to properties was down. We weren't getting as many potential new residents coming into the properties. Obviously, like most other companies, we built some solutions for virtual tours or taking someone on a guided tour via FaceTime or a Google Meet that we had some success with. But some of that's, we've seen a bit of a reversion to normal. In the markets where I operate, there's not a lot of leasing that happens this time of year. We do 70% of our leasing from, March to August, and then the remaining 30% during the kind of fall, winter months. So it's been a little slow, but not atypically slow. I think people are getting a bit more comfortable. There's the big trend, and the bigger concern, and what immediately comes to mind is, slightly as a byproduct of the eviction moratorium, also with there not being, the expiration of the CARES Act, and a new stimulus not having been figured out, especially in I guess what I would classify as the workforce housing, kind of blue collar markets. Yeah. There's a bit of a bubble forming of people who've been unable to pay their rent because they've fallen on hard times. Their places where they worked have closed. Yeah. There's a very small segment of people that are taking advantage of the situation and just making a choice not to. I would say that's a very small percentage, but it is out there. Yeah. And it's concerning to me because ultimately what I think is going to happen is, barring another massive stimulus package or major change in how things are being done, at some point the eviction moratorium is going to have to lift. And as property managers and the property owners, they're going to be put in a situation where we have to pursue evictions on these people. We have debt to service. We have to pay our lenders and pay our bills as well. And it's going to bring a huge, huge flood of available units to markets across the country. It's also going to displace a ton of people from their homes, which is going to be awful. So I think we're going to need to be really mindful of that. I think we're nowhere near the bottom in terms of rental rates and occupancies across the country. Globe Street had an interesting article this week about the drop in occupancies and drop in rental rates in major markets across the country. And I think that's really just a harbinger of what the first quarter of next year is going to look like. I think it's going to be really tough because when all those vacant units hit the market, it's going to hit rents because people are not going to be prepared or used to renting that number of apartments in a short period of time. Yeah. So there's going to be a lot of concessions, and there's going to be a fight to get the qualified residents who have jobs. And ultimately, hopefully, the government can figure out something to soften that. But we're nowhere near the bottom in terms of occupancies and rental rates. I think, especially in the workforce housing, we're just now starting to see some of the impact of the pandemic.
Yeah, I totally agree. I think we really haven't seen the worst of the effects of COVID in the economy. We're still not there yet, and it's just a matter of really just being prepared, having enough reserves, and being ready, having a good communication with the team, meaning the property management team, whether it's with ResProp or whoever else you have managing your properties. I think you just need to be ready, because I'm sure difficult times are still to come.
Yeah, I'll add to that really quick. Property management has always been very hard, but we've been on a big upswing this past decade. From about 2010 to February of this year, and I personally I've had a bit of a feeling that something was going to happen. Our economy functions on cycles. There was going to be a bit of a downturn. Yeah. I was in the business in 2008 during the financial crisis, and I remember how hard it was to get leases. I remember how hard it was to operate these properties. And we're in a bit of a perfect storm where with cap rate compression and where, some of these properties have been selling over the past 3 to 4 years, and the age of those properties, sometimes, being built, depending on the investment strategy of the specific owner. I'm thinking of some properties in the Austin market that have sold 4 times in the past 10 years at a higher price each time, and a lot of times at a lower cap rate. That's not how, the properties are still getting older. It was built in the 70s. That means that the pipes, inside the walls are 40, 50 years old. Cap rates usually go up as property
cap
over
rates.
time.
Yeah. I mean, it's a cap rate. I like to see it as a measure of risk, right? And the cap rates are compressing, but the risk is not going anywhere. Like again, like you said, the properties are, a lot of the properties are being reposition, and investors are putting a lot of capex dollars into these projects and stuff, but not at the same rate. I think the compression has been.
Yeah, and I think there's still a lot of really great opportunity out there. I'm by no means saying people shouldn't be investing. I think they 100% should be investing. I love the space, but the deals have been getting thinner, especially in the older product. Stuff that was built before the year 2000, that had especially the stuff built before 1990. Where there have been big value add efforts, and those properties I think are going to be at risk if management isn't great. And there's a lot of companies out there, and granted, again, I said at the beginning, property management is very hard, but there's a lot of companies who lack some of the fundamentals of good operations, and they've been riding the wave up, and everyone's still been making money because the market's been so good. Business is not easy anymore. And now's the time where, attention to detail, good fundamentals, not being reliant on, outside systems like apartments.com to get your leases, knowing how to organically source traffic. This next year, 2021, is where the really good management companies are going to differentiate themselves. And unfortunately, I think a lot of the vertically integrated shops may make the tough decision to get out of management, because if you don't have a deep talent base of people to draw on, and you've only got a small handful of properties, it gets challenging.
I agree. Yeah, I agree. And then, not only with the property management companies, but just investment companies in general. A lot of people have been jumping into the industry with no real understanding of, like you said, the fundamentals, but because it's been hard to lose money, right? At least the past few years in multifamily specifically. So now we're gonna see everyone being tested. My company and my partners, we've been talking about it, and it's really about having the fundamentals in order. And it's, like I said before, I think we're still heading into some difficult times. Not I wouldn't say for too long, but definitely we're not at the bottom yet, I think, of the crisis, if you will.
Yeah, and challenging times present opportunity, right?
Of course.
That's when a lot of people do really well. I think one of the big deciding factors in that going forward is going to be execution, and execution really comes down to the talent and commitment of the property management team. Yeah.
You mentioned, I want to talk about the eviction process, right? With the whole eviction moratorium and all that. Have you guys thought about new strategies or come up with new ideas on how to maybe collect? Because like you said, there's that bubble that's being created, right? Especially at the blue collar, gray collar space, if you will, where there's a lot of bad debt accumulating. Once you evict someone, then okay, they're out of the property, they were not paying, so yeah, they need to be out of the property. But what about all the money that they owed, like all that bad debt that accumulated? A lot of the times in the past, a lot of people or a lot of management companies, they they made minimal efforts to recover that money. That's in my experience from what I've seen. I think that with that bubble being created and that amount of money being now definitely substantial, have you thought about any other strategies to recover some of that capital, new ideas, new ways to do it, or working with tenants, maybe not evicting them, or like, I don't know, how have you been thinking about that?
Yeah, it's a really good question. I think with anything like this, in good times, of the market, or when things are like now, where there's been big contributing factors to it, a large percentage of residents, having this exposure, first and foremost, we try, I personally and as a team, we try to come to these things with empathy. It's a big part of working in residential property management as opposed to commercial or office or retail.
Right.
We're dealing with people's homes, and there's a sensitivity there that you really have to have. At the same time, we have a fiduciary responsibility to our owners to collect the rent. So, it's you pointed out one thing that historically, property management companies have usually not been very engaged in that process. You pass it off to a collections agency,
right,
fairly quickly. They take a massive percentage of the money, but if they collect it, if they do collect it, it was, at most companies viewed as found money
right,
that you weren't typically going to get in most cases. So if you paid
exactly
50 to 70% of what the total was to get it, it was okay. You're right. That's not something that we should really be doing right now. I know our number one thing at the moment is communication. So, going back to, we started the centralized service, or really ramped up and expanded our centralized services team this year, in March in response to this. And, their running point on maintaining and engaging in conversation with all the people who are having issues, really understanding, what is the root cause. When possible, we're trying to connect them with local resources that may provide rent subsidies or provide grants or benefits. Any local agencies or groups that we can find or we have heard of that can provide support to those residents. We're in a lot of ways playing connector between those groups. And come end of December or whenever the eviction moratorium is lifted, I really think there's a lot of nuance that's going to be required, to where it's going to be a lot of conversations with individuals. I don't think there's a one size fits all, based on, especially, we manage properties in 2 states and I think 9 major cities. Every city is going to have slightly different rules and regulations. Every resident is going to be in a slightly different personal situation. And so to the extent that we're able to negotiate payment plans, whether they move out and make regular payments, or their balance is not so high that we're able to kind of amortize what they owe, assuming they're back to work or got some sort of support over a couple month period. I think those are things that every management company really needs to be considering right now. Yeah. And I think a lot of them are. But I wish there was a silver bullet or a one size fits all or like new tech solution for it. But
right.
It's really, sometimes the old school stuff is what works best. And, talking to people, and, actually talking to them, not just sending them an email, calling them on the phone, or, having them come into the office or going to their apartment, having a conversation, understanding what's going on, whenever possible, giving them options, whether that's leave and pay back over a period of time, stay and pay back over a period of time, or if it's a small balance, allowing them to get caught up. But it's going to be tough. Again, that's why I said that this is when good management's going to shine and find ways to collect that money.
I agree, and especially in these times is when you think back and say, well, again, like we were saying, it's been very hard to basically not do well in the past 8-10 years or something in multifamily, right? So a lot of like you mentioned, the fundamentals, which to me, one of those fundamentals that would definitely pay off when it comes to an eviction or a negotiation with the tenant that we obviously need to do right now because there's a lot of money in the line. It's the relationship building, right? Like the customer service relationship building, community building, making the effort of really engaging with the tenants and offering them from different activities or just overall good communication with them to really build a relationship where they think that, where they're going to feel like they belong and to this community. When it comes to time of crisis, right, then that conversation, it's going to be substantially different if you made the effort in the past, whatever, 2, 3, 4, 5 years that you've owned the property. It's gonna pay off in this type of situations that we have right now. So yeah, it's just a lot of things that you start thinking about that you miss because you probably didn't have to do in the past, right? So
all the corners that were cut on maintenance and all the
exactly.
Because we have to recognize our residents have a decision in this too, right? They could move out and drop keys in the office and say, come chase the money. Yep. And go live somewhere else. And so if you're not engaging them in that process, what's to keep them from doing that? And sure, we can send it to collections, and sure we can, we have means with which to go after it. Yeah. But that requires time and energy and effort. And
more money is being lost. And so, yeah, exactly.
Whereas the resident who's been taken care of and maintenance was done in a timely fashion, and the office staff had a good interactions with them on a regular basis. And not that, we're in a business of challenges, pipes break and ACs quit working. And as I mentioned, we're dealing with people's homes. So there are those sensitive times where things come up, but the real opportunity to win for someone, whether it's a resident or for a property owner, as a manager, is when those times are hard. How do we show when things aren't going well for the resident and they remember that it took a week to get a really split they view as a simple work order addressed, and that will affect the decisions that they make, coming out of this pandemic, whether to renew or if they owe money, etc.
Yeah, no, that you hit it right on the head, because that's exactly what they're going to think. They're going to remember that how you treated them, how the service was in the past couple of years that they've lived there or whatever. And it's about not making it easy for them to make that decision to say, well, go chase come chase the money. I don't care. Anyway,
nobody likes to move, right? Like,
exactly.
Hard. They're doing it. Stuff up. Like, unless someone has changed jobs, had a change in familial status, like got married, got divorced, had a kid, most people don't want to move. So, and that's why, I said earlier with the getting that percentage of people who move because they're upset to stay, it's a big chunk. And then the same thing applies here. So,
Yeah. So, you hear a lot of questions, when especially when you talk to property managers on, or to investors in general on okay, what questions you should be asking to a property manager to understand if they're the right fit for your project, for you as a sponsor or private owner of the property, and how do you vet the property managers, what questions you ask and all that. But I would like to know from your perspective, so how do you vet clients, right? Because I'm sure it's a two-way street, right? It's a conversation where you don't necessarily want to work with a certain type of owner, property owner, or with a certain type of project because it's not your specialty or whatever it is. So how do you vet a new potential client, and how do you go about building that relationship and basically understanding if it's a good idea for you to manage the property for them?
So I'm going to answer kind of both sides of that. I won't go too far down the first side because it wasn't the specific question you asked. But in terms of selecting a manager, I think the big thing there is, what is the manager focused on? Do they have a specific playbook that they always do, or are they actually listening to you as an owner or an investor about what your specific goals are? Because one of the things I love about this business is there's a ton of ways to make money, and everybody approaches the investment in an apartment community different. And really good managers spend time understanding that and learning how to share a lens, I guess is the way I'd phrase it, so that you see things the same. On our side, in terms of how we're identifying and vetting clients, for me, it's really simple as, can you pay the bills? And, what's that process going to look like? Assuming we're operating the property well, I have zero interest in being a slumlord. And, there is a cost of operations. Granted, most properties make really good money. Most make money, period. But, understanding, are you if there's a pandemic and there's a downturn in the property, are you in a position financially that you could fund the property so we could do essential repairs,
Right.
and keep the property operating at the standard that we have for ourselves and the expectation that we know our residents have for us. Independent of that, I have worked in my career and enjoy working with investors of all types and all levels. I'm working with some people now who it's their first acquisition in and commercial real estate period. And, granted, those require a little bit more time. I'm spending a fair bit of my time with them, really educating them on the industry. But for me personally, I don't mind that. I am lucky enough to get to teach for a professional organization I'm involved with and teach their finance coursework and maintenance and risk management coursework.
Yeah.
So I love to do that in general. So anything from the first time buyer to a family trust or a syndicator up through the big institutional groups.
Yeah.
I've been able to work with them all and enjoy working with them all. They're all very different, but frankly, that's what makes it fun. And I get to learn something from each of them. The person who's never owned an apartment community, much as I said in my intro, how the time away from the industry benefited me. Sometimes that unique perspective is full of great ideas that we may not have uncovered or a suggestion. So I'm always really mindful of being receptive and when people have those sorts of ideas. So there's not, outside of really being able to pay the bills, there's not anything that's a definitive no.
No, yeah, that makes a lot of sense. That makes a lot of sense. You're pretty flexible on who you decide to work with. I mean, the reason I ask is just because I understand how different property management companies, at least the serious ones, right, will have a clear understanding of who they want to work with and why. A lot of them are specialized in let's say stabilized properties only. Some of them might go into a little bit more distressed properties and specialize on stabilizing them and whatnot. So that calls for different type of investors. So
So I'll amend that a little bit after hearing you say that. We're primarily focused on market rate apartments, and so that's where a lot of the energy is focused. Both in my career prior to coming to ResProp, as well as kind of where ResProp came from as a company, done a lot of value add. Everything from properties built in the 60s through built in the early 2000s, anything from a couple $1,000s a unit up to $30,000-$40,000 a unit in total spend on the renovations. And I will say from a passion standpoint, because we don't have necessarily a specific archetype that we have to work with.
Right.
As a company, one of the principles behind the parent company of ResProp, Rex, that also extends down to this company is, we're looking to help elevate humanity, and on the ResProp side of things, doing that through real estate. So, I mentioned we're trying to innovate. One of the big reasons we're trying to innovate is we're trying to push our cost of operations down, which will allow us to bring professional property management services to property sizes that typically we're not able to hire a professional established management company.
So we're talking, So we're talking instead of 200 units or 150 plus units, now you would ideally be able to start working with 80 or 90 unit properties or that type of.
Yeah. So I've got my floor today down to 90.
Okay.
I would love to get it down to 4, or 1.
Of course, yeah.
And we think we have a path to do that. And frankly, the owners of those properties are the ones who need us the most.
Exactly. Agreed.
The big fund or REIT or institutional company that buys hundreds of millions or billions of dollars of real estate they have an inherent expertise where they, in a lot of cases, actually, from the handful that I've worked with, dictate a lot to management about what they expect to happen. Whereas the family that's buying something as an investment, whether it's a family trust or there's a whole cohort of syndicators coming into the industry now through the different lifestyles and think sorts of organizations that are out there. They don't have that experience, and they need our expertise and guidance. And especially in the under 90 unit case, they don't own a bunch of those in most cases. And that's the biggest investment that group will have ever made in their lives.
Yeah.
And they think about it every day. They worry about it every day. I know I would if, I just spent $5 million on something for the first time ever. And they deserve a management option that is able to bring all the fundamentals, all the best practice that the bigger properties get the benefit of, the buying power with vendors and suppliers that bigger properties get to take advantage of, and bring that down to those smaller properties. So as a team and me as an individual, we have a great passion for trying to solve that riddle and trying to bring the opportunity to invest in multifamily and invest in real estate to people who, while they may have had the financial ability before, the fear because of lack of understanding or around managing the asset from an asset management perspective, keeps them from doing it, and they end up putting money in other places instead of multifamily or investment real estate.
Yeah, love it. Listen, man. Yeah, I have a bunch of questions that I wanted to ask, but obviously we have this time constraint. We'll definitely think about having you back on the show. You definitely brought a ton of value this past half an hour that we've been talking. So I appreciate you joining us. Let us know if people want to get in touch with you, learn a little bit about ResProp, of course, and then just property management in general, or just getting in touch with you to connect. What would the best way to do that be?
Yeah, so best way to get in touch with me directly is probably via email, or you can find me on LinkedIn. If y'all don't have the link, I know Arturo has it, but we'll get that to y'all, so you might be able to link it out from when this goes live next week.
Yeah.
But LinkedIn and email are best options. Email is srea@respropmanagement.com. And we operate properties throughout Texas and Florida. Have about 7,000 units currently under management. Have an amazing team, an assembly of talent. It's really amazing. I hate to use the word amazing twice, but the big draw for me, in addition to the innovation of joining this company, was the diversity of talent from other industries that have joined the team. Whether it's people who were, worked on Amazon Web Services or worked at Amazon on their web services product, or our COO was 27 years at Starbucks and went all the way from barista to senior executive there. And so there's a lot of unique perspectives on business and how to operate things, as well as a lot of kind of deep industry knowledge through people like myself and several other people in the company who've got 10, 15 years plus experience in operating these communities. Right. And that synergy and is where a lot of our innovation, a lot of our energy comes from, and why we feel really confident that we're going to be able to, for our owners, we're going to be able to maximize their properties and really drive the industry forward. I've been saying privately, I guess I can say it on a podcast, because I don't think it's a huge secret, and even if it was, I don't think they can necessarily do much about it anyways. Yeah. But there's been a massive consolidation in property management over the past decade, where there's a small handful of really big players and then everyone else. And I'm starting to really think that those bigger companies are Blockbuster or the BlackBerry, and they don't realize it yet because they're too big to make some of the changes that need to be made to run these properties better. And I'm really excited to be with a team where we're operating on today's best practices, but we're not afraid to question and try to determine what tomorrow's best practices are going to look like in a way that's responsible and doesn't put our owners' assets at risk, and it's very mindful that we're an NOI business, and has to be priority one. But being able to pilot and develop some changes that are going to, hopefully over the next 20 years, really change the face of what property management looks like.
Awesome, man. Love it. Well, everyone, ahí lo tienen. Steven Rea de ResProp Management. Ya lo escucharon. Bueno, encantado de haberlo tenido. Si les gustó el episodio, si consiguieron un poquito de valor en este episodio, por favor, compártanlo con su audiencia. Denle like. Síganos en nuestras redes sociales. Estamos activos por Instagram, LinkedIn, Twitter, por todas las redes sociales. Se habla Real Estate. Estamos ofreciendo un analizador de mercados, un market analyzer con su guía básica donde conseguir toda la información. está bien, bien completo y creo que los puede ayudar en su proceso de identificación de ese mercado donde quieran empezar a invertir. Así que, o nuevos mercados para explorar. Así que si están interesados, envíenos un email a info@sehablarealestate.co, eso es CO al final, y con todo gusto les enviaremos el archivo con su guía y todo para que lo puedan empezar a utilizar. Totalmente gratis. Steven, once again, thank you for joining us, man, and I guess we'll see you on the next one.
Thank you.
All right, bye-bye.